Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. The yen may be near 24-year lows, but Japan's central bank is not even close to trying to support it with higher interest rates. That is the message from three conquerors familiar with the thinking of the Bank of Japan, and it was strongly implied by the country's top foreign exchange diplomat last week and ended by central bank chief Haruhiko Kuroda in July. The government, especially the Ministry of Finance, has repeatedly and strongly expressed dissatisfaction with this year's falls in the yen, which on September 7 dropped as far as 15 per dollar, down 30% since the end of 2021. But the central bank is independent and by law obligated to adapt to inflation and the state of the economy, not the exchange rate. Its support for the weak economy with ultra low interest rates is the main factor behind the yen's weakness since other central banks, notably the US Federal Reserve, are briskly tightening monetary policy, making their currencies more attractive as destinations for capital. The BOJ has no intention of raising interest rates or tweaking its dovish policy guidance to prop up the yen, the source said. The BOJ wants directly target currency rates in gilding policy, said one of them. It looks at yen moves in the context of how they affect the economy and prices. Current economic conditions don't justify tweaking ultra loose policy, that person said, expressing a few actions by the other two sources. Official statements are in fact consistent with that. The BOJ has joined the finance ministry in warning against sharp falls in the currency. But Kuroda said in July, it's hard to believe that just by raising rates somewhat, you can stop the yen's decline. That view is still widely shared in the central bank, the source said. When the MOV expresses its displeasure with the yen's falls, it is said to be John Bunning, dropping a hint that it may intervene in the market to support the currency. This is intended to make traders conscious in selling the yen. Last week's comments by Masato Kanda, a MOV official who served as Japan's top currency diplomat, emphasized the divergence between the government and central bank, but we're extremely worried about recent rapid yen moves, Kanda said. But he declined to comment on BOG policy and said the government instead of government and the BOG was ready to use all available tools to battle excessive yen declines. Each of us has our own mandate. That's why I carefully use that government as the subject at times and government and BOG at other times, Kanda told reporters. He said he was speaking after a meeting between the ministry and central bank. Japan's economic weakness given the BOG title little reason to withdraw the monetary stimulus that is undermining the yen. The central bank is said to maintain ultra-low interest rates and dovish policy guidance at its September 21 and 22 meeting. As for the currency, the most it can do is to maintain or perhaps tighten a warning it inserted in its policy statement in June. It said then that it will closely watch financial and currency market developments as well as the impact on Japan's economy and prices. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe.